Hey everyone, welcome back to Corporate Decoder, the place where we break down complex financial reports. So you don't have to, and today we've got a real juicy one, Ambarella's latest 10Q filing for July 31st, 2025. And let me tell you, it's a mixed bag with some serious highlights. Before we dive deep, if you enjoy getting ahead of the curve by understanding what these financial documents actually mean for companies and your investments, make sure you hit that subscribe button. And hey, we've built a fantastic community on Discord where we dissect these filings together, so join us in the description below. Alright, let's get into it. We're looking at Ambarella's performance for the 3 and 6 months ending July 31st, 2025. Think of this as a mid-year checkup and how they're doing compared to last year. First up, the balance sheet as of July 31st, 2025 shows their financial snapshot. They've got total assets of about $706 million. A good chunk of that is in current assets, meaning stuff that can turn into cash fairly quickly. Their cash and cash equivalents stand at $142.7 million. That's a slight dip from January, but still a solid amount of readily available cash. Then there are their marketable debt securities, which have grown nicely to $110. 8 tells us they're not just holding cash, but investing it in relatively safe interest-bearing assets. That's usually a good sign of prudent financial management. Now, accounts receivable, which is money owed to them by customers, has increased to $42.9 million. This usually moves with sales, so we'll see how that plays out in the income statement. When we look at their long-term assets, property and equipment are valued at $10 million. This isn't a huge number, which makes sense for a semiconductor design company that outsources manufacturing. But check this out, intangible assets like software licenses and developed technology are $41.90. This shows they're investing in the actual brain power and intellectual property that makes their chips special. And then there's goodwill, a whopping $303.6 million. This typically comes from acquiring another company for more than its net asset value. It suggests they've made at least one significant acquisition in the past. On the other side of the balance sheet, total liabilities are around $130 million. That's a manageable number compared to their assets. Shareholders' equity, the owner's stake in the company, sits at a healthy $576.5 million. This gives us a good picture of their overall financial health. Now let's move to the income statement, which shows how they're actually performing in terms of making money. Here's the big news. Revenue for the 3 months ending July 31st, 2025 was $95.5 million. That's a massive jump of almost 50% compared to the same period last year. For the first 6 months of the year, revenue hit $101.4 million, 33% from last year. This is fantastic growth. They attribute this to selling more chips, especially their higher priced AI chips, and also more revenue from engineering services. Ved's tabular growth, they attribute this to selling more chips, especially the higher priced AI chips, and also more revenue from engineering services. This strong revenue growth directly translated to gross profit, which came in at $56.2 million for the quarter, up significantly from $38.7 million last year. However, they are spending a lot on research and development. For the quarter, R&D was $59.7 million. That's more than their gross profit. For the first 6 months, it was a $118.6 million, and 18 tons a million. They're investing heavily in developing new AI and computer vision technologies, which is crucial for their future, but eats into current profits. Selling, general and administrative costs were $18.5 million for the quarter. These are costs related to running the business like sales and marketing. Because of those high R&D costs, they still reported an operating loss. For the quarter, it was $22 million, which is actually an improvement from $36.3 million last year. For the 6 months, the operating loss was $47.8 million, also an improvement from $75.7 million last year. So while they're losing money in operations, they're losing less money than before as sales grow. Ultimately, this leads to a net loss of $20 million for the quarter and $44.3 million for the first 6 months. Remember, these are improved results compared to last year, which is a positive trend despite the overall loss. The number of shares outstanding is around 42.7 million. This is important for calculating earnings per share. The comprehensive loss statement shows other items that affect equity but aren't part of the income statement. For Ambarella, this mainly includes changes in the value of their investments. They had a small unrealized loss on investments this quarter, leading to a total comprehensive loss of $20.30 million. Looking at shareholder equity, we see how the company's net worth changes. The issuance of shares through employee plans and stock purchase options added to equity, while stock repurchases reduced it. Stock-based compensation, which is essentially paying employees with company stock, shows up here too, adding to equity. Now, cash flow is king. How much cash are they generating or using? For the first 6 months of 2025, they actually generated $3 million in cash from operations. This is a huge improvement from just $8 million generated in the same period last year. This is a really positive sign that their core business is starting to generate positive cash flow, even with the R&D spending. In investing activities, they used $21 million. This is mainly because they bought more marketable debt securities, which we saw increase on the balance sheet. They also spent $8.7 million on property and equipment. Financing activities show a net outflow of $0.7 million. This primarily reflects them repurchasing about $1 million worth of their own stock. Let's quickly touch on a few key notes to make sense of some of the numbers. Ambarella points out a significant risk. A large chunk of their revenue comes from just a few distributors, especially WT Microelectronics. For the quarter, about 71% of their revenue came from WT alone. This is a huge dependency. If something happens with WT, Ambarella's business could be severely impacted. It's like putting all your investment eggs in one basket. They also have $442,000 in restricted cash, mainly tied up as a security deposit for a new office lease. Not a huge deal, but it's good to note not all their cash is immediately available. Inventories are around $33.8 million. This is a slight decrease from January, which might be good if they're selling through inventory faster. The breakdown of property and equipment shows computer hardware and software is their biggest physical asset, valued at $27.5 million. With intangible assets, the $46.99 million in software licenses is notable. They're amortizing these over time, recognizing the cost as an expense gradually. Accrued liabilities, which are basically upcoming bills, are $76.2 million. A significant portion is for accrued employee compensation and product development costs. The numbers for stock-based compensation are quite high, showing up in R&D and SG&A. For the 6 months, it was $51.30 million. This is a significant expense, but it's also a way they attract and retain talent in the competitive tech industry. Net loss per share is currently negative as expected, since they're not profitable yet. For the quarter, it's a loss of $0.47 per share. Now let's talk about the risks. Ambarella is very open about the challenges they face. This is a big one. They're betting heavily on the automotive and AI-powered features, but success isn't guaranteed. It's a tough market with big players. They also highlight that the markets they're targeting might not grow as fast as they expect. If AI adoption slows down, it directly impacts their sales potential. This dependency on a few big customers like WT Microelectronics is a red flag. Losing even one of them could be a major blow. Competition is fierce in the semiconductor world. They're up against some giants like Nvidia and Qualcomm, who have much deeper pockets for R&D and marketing. And of course, there are external factors like trade tensions with China, economic slowdowns, and inflation, all of which can create a lot of uncertainty. So what's my take on Ambarella's report? On the positive side, their revenue growth is phenomenal. They're clearly selling more, especially their advanced AI chips, and that's a strong indicator of market demand for their technology. The improved operating loss and positive cash flow from operations are also very encouraging signs that they're moving towards profitability. However, the risks are significant. The heavy reliance on a few customers, particularly WT Microelectronics, is a major concern. If that relationship sours or WT faces issues, Ambarella could be in serious trouble. Their massive R&D spending is necessary for long-term survival in the tech industry, but it means they're still losing money on paper in the short term. This strategy is a gamble on future market dominance, and it's a gamble that requires a lot of capital and sustained growth. Ambarella is a company with cutting-edge technology, particularly in AI and computer vision, which are undeniably huge growth areas. The big question is whether they can translate that technological edge into consistent profitability and diversify their customer base to mitigate dependency risks. If they can navigate the competitive landscape and capitalize on the automotive markets, they have a very bright future. But it's a high risk, high reward scenario right now. Alright, that's our breakdown of Ambarella's latest filing. What's your take on these numbers and what they signal for the company's future? Let me know in the comments below. If you found this analysis valuable, please give it a thumbs up. It really helps the channel out, and most importantly, subscribe for more deep dives into the world of corporate finance. Don't forget again to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.